Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 23rd of September, 2020. And just like the past couple of days, we've seen some excitement in the precious metals market. Now on Monday, we published a video entitled, Why Silver Prices Crashed Below Multiple Support Levels, where silver prices fell below $25 and into the early $24 region, settling then at $24.41. And gold, although falling below $1,900 for a short time, then recovered a little and settled at $1,903. Then yesterday, we published another video podcast entitled, Gold Price Declines, but is it only temporary? At which point gold had moved again during the day, but held fast at $1,905, but silver had dipped further to $24.29. Now it had been lower than that, but that was at the time of producing the podcast. Now in both videos we cautioned in favor of lower prices for both gold and silver, and especially silver, because our analysis indicated that the spread of the COVID-19 virus, increasing lockdowns, and concern this would have on manufacturing, and therefore the demand for silver for industrial purposes, would hit silver prices harder than gold. We also pointed out that the stronger US dollar, being seen again now as a safe haven asset, could strengthen further, thereby adding even greater downward pressure on precious metal prices. Now today, both gold and silver so far have taken another sizable hit. Now at the time of producing this podcast, which is 18:55 GMT plus 1, which probably will reach you in about an hour and a half time, gold stands at $1,865 and silver $23.01, producing a gold to silver ratio of just over 81 to 1, even higher than yesterday's recent high of 78.4 to 1, reflecting the current lack of confidence in silver right now. So gold and silver are currently very close to their day lows, with gold having only been $2 lower at $1,862 and silver actually touching $22.97, so falling below $23. Now, to be fair, both platinum and palladium are down today, also reflecting the general trend of precious oblique industrial metals taking the greatest hit. Now, US equity markets are currently lower, though of course they haven't closed as yet, so things can change. But at this precise moment in time, the Dow Jones is down 216 points at 27,071. The S&P 500 is down 27 points at 3,288, and the Nasdaq is down 172 points at 10,790. The dollar index has surpassed the 94 level and is currently standing at 94.22. So those who listen to our weekly updates on Saturday will be aware of why we quote these figures. Now, we've also had US announcements for September for the figures for the market manufacturing PMI, which came in at 53.5 compared with 53.1 last month, and the market services PMI, which came in at 54.6 compared with 55 the previous month. So we're seeing a slight softening really of these figures, because one would have expected the September figures to have been a little bit higher, as the new closures or lockdowns are only just really taking effect. Now, of course, all eyes will be on the weekly jobless claims figures tomorrow, plus new home sales. But we must not forget the durable goods orders and core capital goods orders figures for August, which will be announced on Friday, though tomorrow perhaps is more likely to be the important day. Now, briefly looking at gold, it has broken through a key support level, and some analysts are actually predicting a decline to the 200-day EMA, sitting in fact just below the 1800 level. But of course $1,800 will be psychologically very, very supportive. But that said, a recovery above 1900, should that happen, could see a bounce towards 2000 and even higher, though frankly we suspect that's not going to happen just now. In fact, we're probably, on balance, negative gold and silver for the next week or two, unless of course there is some major unexpected news being announced. Now, silver's next key support level rests around $22.50, but it could, the price, easily fall back to $20. Now, some may remember a number of weeks ago we did state not to be surprised should silver fall to the $22 level and potentially hit $20 again before any new upward leg is achieved. We were scorned by that prediction. We're not that far from it now. Well, we could legitimately be facing this prospect, but leaders to say if silver does dip to $20 or even lower, we ourselves will become eager buyers. We don't need right now to buy, frankly, but sub $20 will be well worth going for should it happen. We're not saying it definitely will, but the signs are prices are very soft currently. But if you do buy, do so please, taking the medium-term outlook into account. Now, because of premiums, and because we already hold enough physical ourselves, we may indeed be tempted to buy via Bullion Vault or an ETF, as frankly we're not expecting the complete meltdown of the financial system right now, unlike some pundits, and to be brutally honest, do not wish to pay the high premiums that are currently being asked and will probably be increased should silver fall to that level again. Now, yes, it's a gamble. We're aware of the sage saying, if you don't hold it, you don't own it. But we have more than enough physical to take that gamble, and frankly we think it's a very low risk one at this stage. Now, we have been asked by subscribers, which is the better bet to buy into right now? Well, if you had to buy for safety and you needed to buy now, we would probably buy gold because we think the downside is less, percentage-wise of course. But then if you feel speculative, it may be worth holding off to see how low silver does actually dip, and then consider buying that for the rebound. Now, yes, it may rebound from its current level. We can't rule that out, though we still believe there will be softer prices for the next week or so. But we're not oracles. We cannot make those guarantees. We are tempted to do the latter, as again we hold enough gold in our opinion, and so a bit of spice may be what's needed. However, you must do what is right for you, and bear in mind that all of us have differing considerations, different portfolios, and very different risk profiles. Now, earlier today, Fed Chair Jerome Powell reiterated that there's a long way to go for the economic rebound, which will likely require more support. Vice Chairman of the Fed, Richard Clarida, alongside regional central bank chiefs Charles Evans and Loretta Mester, also cited the importance of fiscal policy to bolster the recovery. In other words, what they're saying is that the banks have done all that they can do. It's now up to governments to do something. Fed Bank of Boston President Eric Rosengren offered a pessimistic view on the economy's ability to bounce back quickly without further aid. Now, Bloomberg earlier quoted Loren Goodwin, economist and multi-asset portfolio strategist at New York Life Investments. This is what Loren said, quote, "Markets are digesting and grappling with this idea that the growth expectations that investors have might not materialize. As the fiscal impulse in the United States starts to wane, some of these expectations for a slow and steady recovery are shaken." That's a really important quote because, of course, we have seen silver benefit from two types of demand. The one is monetary demand because of concerns about the dollar, and the second is, of course, an increase in industrial demand because it was generally seen that the economy was beginning to rise again. Of course, if that does not materialize, then the industrial demand component falls, thereby putting downward pressure on silver. Now again, there is the potential then that the monetary demand for it will rise, but the question one has to ask is, will that be greater than the demand for it as an industrial metal? Or will perhaps people say, well, I'd rather go for gold in that case? These are the things we have to take into account. You see, we have to also bear in mind, though, that as equities fall, the pattern generally is for gold to do so as well, at least initially, and particularly if the fall is moderately significant and quick, as losses and margin calls are often covered by the sale of such assets. So seeing gold dip is no surprise currently, and it won't be a surprise if there is a further deterioration in stocks. Now, the gold price will then likely recover shortly after, but traders, being the type of animal that they are, will have to cover those losses. Now, we also have to acknowledge that although a dollar index of 94 is not that high compared with recent years, it is the highest it has been for the past 8 weeks. And frankly, most analysts and economists were expecting further falls below 92. We also expected a small dip, but nowhere near as sharp as many others were predicting. Now, this reversal, in other words to the upside currently, is acting as a headwind to precious metal prices for sure. And we really have to gauge to what extent any lack of confidence in the equity markets will reflect in a further move of investors to gravitate their funds towards the dollar, the US dollar that is, and government bonds compared with gold and silver. Now, having said that, on the positive front, Reuters had some good news for us gold, particularly gold, but also silver stackers, quoting Philip Streibel, a senior market strategist for RJO Futures in Chicago, who said, quote, "Long-term uncertainties are still looming, and no investor would lose the opportunity of adding gold to their portfolio when prices are low. Investors are waiting and watching what the major central banks will do next. At this moment, most of the monetary and fiscal policies available have already been implemented." Unquote. Thus, the demand by Fed Chair to say to governments, you must make the next move. Now, we suspect that the next move upward in precious metals of any significant degree is more likely, therefore, to be off the back of any major new stimulus package announced by the United States. Now, with the Congress and Senate at loggerheads, it should not be a surprise if this may be some weeks off. We do see a deal happening of sorts, and President Trump, no political dummy when it comes to optics, will be seen to ensure there is some good news for electors prior to the election on the 3rd of November. This is why we suspect there may be further downward pressure for a week or two, and then potentially a recovery in prices thereafter. But much depends, frankly, to what extent the COVID-19 pandemic is kept under control, the level of lockdowns that are necessary to do this, the level of business closures that we encounter, and the level of unemployment created in the interim as a result. Plus, of course, the prospect of a readily available vaccine in short order and early. The Democrats and Republicans, of course, fighting over a new Supreme Court appointment will divert attention from such a deal being made too quickly. But neither party wishes to be blamed for massive House repossessions, huge redundancies, which are likely to follow, should a new stimulus package not be introduced. We are in interesting times, and it's not difficult, to be blunt, to predict the future. It's just difficult to place a more precise timescale on events. Though we feel quite happy with our predictions so far. The one thing we will say with a degree of near absolute confidence: remember that $50 silver everyone said would be here? Some said at the end of August, others at the end of September, some at the end of October, and a few November or December. We are now more certain than ever that that is not going to happen in 2020. Now, we could be wrong, and there is still time, which is why we won't rub anyone's noses in it who disagreed with us. Well, perhaps not just yet. Now, that said, as we quoted yesterday, it goes without saying, though, that once economic activity resumes and rises again, then and only then will silver, in our assessment, bounce back both quickly and hard. I'm not saying it won't rise before then, but bounce back quickly and hard. And so rather than be depressed about current price declines, these moves downward should be relished as a further buying opportunity, taking into account, as we've said earlier, and we cannot stress enough, the medium term in mind. What do you think? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.